Putin, politics and oil. With prices plunging to their lowest levels in a decade, a deal between Moscow and Riyadh could take 2 million barrels a day off the market, pushing prices and government revenues up. But are they ready to parley? This is Inside Story. Welcome to the programme today with me, Peter Dobby. Oil, black gold, money. It takes millions of years to create and only seconds to burn. But our petrol tanks are filled to the brim, overflowing in fact, and as a result, the price has tumbled. Just take a look at this chart. Now, less than just 2 years ago, a barrel of oil was well up over $100 per barrel. Now, since then, as you can see there, it's gone down, down and down to $50 a barrel, and then bottoming out at under $30 a barrel. What that means now, today, is from Siberia to the Arabian desert, oil companies and governments, they're losing money. That's the business story, but it is, of course, also a political story. The last time oil prices dropped so very low and stayed there was in the 1980s, when the Soviet Union collapsed and the Berlin Wall came down. Russia blames the West then and now for orchestrating the slump in the oil price. There is talk in the Kremlin of an American-Saudi conspiracy and NATO economic warfare. Here's what the Russian President Vladimir Putin said when prices first began to drop. Quote, either there's some kind of plot by Saudi Arabia and the US to punish Iran or influence the economy of Russia, Venezuela and so on, he said. It may be or it may be not. For every dollar fall in the oil price, Russia loses around $2 billion in revenue. And the Kremlin needs that money. A staggering 50% of Russia's government revenue comes from oil and gas. 68% of Russia's total export revenues in 2013 came from oil and gas sales. If they can overcome their mutual suspicion, and that's a big if, a deal between Russia and Saudi Arabia to cut production could take 2 million barrels a day off the market. At the end of January, hopes of an agreement sent prices surging by 8%. They did fall back after OPEC refused to confirm or deny the reports. But the Russian Foreign Minister Sergei Lavrov says the Kremlin is ready to cooperate with its rivals. There we are. Here we go. Let's bring in our guests. Joining us today on Inside Story, Anastasia Nesvetalova, political economist at City University in London, Sean Evers from Gulf Intelligence Oil in Dubai, and Mikhail Kruishin, who's with Rus Energy Consulting in Moscow. Mikhail, coming to you first, can we, should we, bank on a deal between the Russians and the Saudis?
Well, I believe that Russia has clearly indicated it is not going to be part of any deal with OPEC or other oil producers. Today, the Russian Ministry of Energy proudly announced that Russia is producing as much oil as it had never produced before. And last year, its production increased by about 2%. And exports of oil increased 26%. So Russia is actually increasing production and not decreasing it.
Sean Evers in Dubai, surely there's just too much bad blood between Riyadh and Moscow for them to come up with anything really productive.
That's probably true to do with many different issues, but there's nothing like a very low oil price to get people's attention. And I think when we saw the price drop into the 20s in the earlier part of January, the noise and the drums started to beat about cooperation. I think there does remain a possibility that the pain of low oil prices could bring them together. But the history of questionable trust, shall we say, not so much about the recent geopolitics, but if you take the $10 oil experience back in the late 90s, when non-OPEC countries like Russia and others promised to support OPEC in their fight to prop up oil prices. They made commitments to reduce their supply alongside OPEC, but of course they never followed through with that promise. And so from those days, there really is a lack of trust that whatever Russia might promise to OPEC, there's really a large amount of doubt whether they would ever actually execute on that.
Anastasia, how damaging has this been to business investment? And given that business investment has a huge trickle down for the rest of us, what's the potential consequences for you?
It depends who you are and where you are. Broadly, oil prices, theoretically, the lower they are, the better it is for economic growth. It boosts production through reduced costs. A lot of expansion into alternative or substitute industries. So theoretically, it should have been a great boost to especially oil importing countries, but also to commodity exporters who now can save on their major expenditure. But overall, this theoretical impact hasn't really translated into a very tangible real effect. It's compounded by financial uncertainty, by unclear expectations about China, about unclear expectations, as the other two speakers have said, about the negotiations with the OPEC and the Middle East broadly. So overall, there are a lot of knowledge, theoretical and historical, about what we can expect to happen, but so far it hasn't been happening at all.
Mikhail,
the danger for advanced countries who are importing oil is overall deflation level. So broadly, in a healthy, let's say, low inflation economy, low oil or energy costs are great, but in a deflationary environment, they are devastating for economic growth and any type of recovery.
Mikhail in Moscow, why is it therefore that those theoretical win-wins aren't winning? Everyone seems to be losing.
Well, I think that not everyone is losing. We see, for example, Europe is gaining some benefits because of low oil prices, because after oil, natural gas is also to be cheaper. And in the next couple of years, the price of gas is expected to be, gas is going to be sold below production costs at some ridiculously low prices, just as oil is now marketed in some places below production costs, such as Russian oil, because some of the Russian oil is coming from ongoing projects where capex have already been reimbursed long ago, and people are just exploiting whatever reserves they have and which are easy to tap, rather than explore new fields and invest in long-term development. Nobody is planning for a long period of time, and the horizon of planning for Russian oil companies is not longer than a couple of years.
Sean Evers in Dubai, is what we're talking about here really, to give it another name, protectionism? Because Saudi Arabia has $600 billion worth of revenue stashed away someplace, so it's well insulated from the potential downside of all of this.
Yes, it is to a relative extent, but it can quickly burn up that piggy bank, if you like, when you're talking about budget deficits of 10 to 20, 15%. That cost them over $100 billion last year, and that with an outlook for another $100 billion. So very quickly you could burn through a lot of your savings. I think there's some positive indicators in a way to sort of look at the tea leaves a little bit on what one of the earlier speakers has said regarding Russia pumping at its full maximum capacity or record levels. That in some way could be a positive indicator of a deal, because like Saudi Arabia, which is similarly producing increasingly more and more production, it's a posture to take ahead of a negotiation, right? So if I'm producing at X, then if I'm going to do a deal, I'm going to cut from X. If I'm producing at X minus already, then I'm going to cut from a lower point. So the fact that Saudi Arabia and Russia are really pumping near full tilt is an indicator that perhaps they're ready to deal from a stronger position. That, maybe some kind of overreading of the tea leaves, but it is a well-known strategy from oil producers, certainly within OPEC over the years, to ramp up production ahead of a negotiation, so that then you're sort of talking from a higher level, and then you're cutting from that point. So that may be a positive indicator. I would also point out that there is a greater increasing urgency to resolve this crisis. We're talking earlier about what's the macroeconomic benefit for importers versus exporters. I think at the moment we've sort of reached a level where it's a net minus for everybody, and I mean that from not only the point of view of macroeconomics, but geopolitical negative. If we look at the consequence that Europe is now facing from a flood of migration from the Middle East, based obviously primarily on the crisis in Syria, but overall, the more stress the Middle East is under from the point of view of revenue and income and socioeconomic instability, we're clearly seeing now that there's a very big price for Europe to pay from a migration point of view, and with further outlook and instability from lower and lower oil revenue, which is really a major driver for the whole region. Saudi Arabia uses its savings to fund Egypt. It uses its savings to fund Bahrain, Oman, supporters in Lebanon. It's not just for its domestic requirements. So it's very, very important for everybody that there is now some kind of stability to the situation in the Middle East. One of the key pillars to stability in the Middle East is a minimum oil revenue in which all socioeconomic health can be maintained.
Anastasia, you were nodding there and agreeing with Sean Evers in Dubai, the first third of his analysis. So this idea that Russia can't stop producing because it would be too costly to shut the pumps and then restart them after the Russian winter has begun to turn into the Russian spring, that's really just some sort of economic leverage so they can take pressure to the table if and when they talk to the Saudis.
It could be part of political pragmatism, and it can be part of the negotiating tactics. But there is also an important macroeconomic and political leverage that Russia is gaining from low oil prices. And this is the indirect effect of low oil. Usually for oil exporters, such as Russia, Venezuela, Nigeria, low oil prices translates practically one-to-one. The correlation is very strong into very low value of domestic currencies. So what Russia is having as a benefit of the current geopolitical and economic crisis is a very reduced value of the ruble. It collapsed several times over from its early 2014 level, for example. One of the political advantages of the low ruble for politicians, or at least for the Ministry of Finance, is that they can manage their budget much better than they could have with a stronger currency, stronger domestic currency. So although they do pump to the maximum, and although the aggregate revenue might be much sharper than it was in the period of windfall gains, at the moment they can afford many more rubles domestically as budgetary expenditure, budget items, than they could have in kind of high oil era. This doesn't say, or this is not to say that Russians are having it in a great scenario. The real value of incomes and salaries is going down, but it is politically easier to manage at least budget deficits and budget balancing, although there are clearly pressures on it.
Well, it's not just Russia that's feeling the pinch. This chart shows the break-even oil price from nation to nation. It costs some countries much more than others to get the oil out of the ground. Sitting at the top of our chart today, Nigeria. The key figure there that we've got to remember, $70 a barrel. It needs to sell oil at that price to be in profit. We're also going to touch on the idea of how much it costs Venezuela, what it needs to hit. That needs to hit $55 a barrel to keep its economy in the black. Saudi Arabia and other Middle Eastern countries, well, they have much, much lower prices, much lower compared to their production costs. Profits might be down, budgets under pressure, but they are still making money. Coming back to you, Anastasia, picking up on that point about the strength of the economy and how the cost of oil feeds into that. If you're the Russian economy, if you're running the Russian economy and you're buying or selling in dollars, your economy is in theory so big that you can convert it to rubles within your economy. But if your economy is inherently weak, that doesn't seem to make sense. It doesn't seem to be increasing your profit margin.
Yes, but it's disaggregation that matters. Even the Russian economy, although broadly it's very import dependent, there are industries that are growing through domestic demand, through domestic markets. One clear example is agriculture, that had been depressed for some time during post-Soviet reforms, post-Soviet period, but has grown at a minimum of 4%, but maybe even higher in the current period of sanctions and financial isolation. So, and counter sanctions as well that Russia has imposed on its European trading partners. So this is clearly one example of a sector that is extremely energy intensive. Agriculture is the largest consumer of oil and gas. It needs a lot of energy, but it can grow in a broadly protectionist context, but where there is a potential for domestic market. There is also some indirect benefits to those who are exporting actual commodities to the final markets, although for Russia it's not very large. But there are some reports that Russian car makers are making progress in their new markets and profits because they are slowly switching to Russia-produced elements or ingredients, or the parts, the component parts that are making up the final product. And that helps them capture new markets in terms of exports.
Mikhail, it's other OPEC countries as well, of course, that are in desperate need of the oil price coming up. Up until just this past couple of weeks, the received wisdom had been, give it 6 months, it will percolate through, it will rise. Is that timescale now right? And what are the countries that need that timescale to be right?
Well, I believe that if you take a look at the Russian oil production, you would understand that you would have to wait about 2 years until you see Russian national oil production starting to decline. Because right now, oil companies are exploiting ongoing projects, old projects, drilling new wells in them, and they refer from investing in anything new. And please remember that 70% of remaining oil in Russia is hard to recover resources, tight reserves. And no one is going to produce those reserves because production costs could be as high as $70 or $80 per barrel. It means that production in Russia is going to get down in the end of this year or beginning next year. And according to some predictions of oil companies themselves, in 20 years from now, Russian oil production is going to be less than 6 million barrels per day, falling down from the current level of over 10 million barrels per day. So whether it is cooperation or no cooperation with other oil producers, Russia is going to witness a tremendous decline in oil production in a couple of years.
Is the reality here, Sean, that Moscow, very difficult, of course, always to second-guess Vladimir Putin and his thinking, but does the Kremlin have to accept that there has to be a cut in production, not necessarily to that timeline that Mikhail was outlining, but a realistic cut in production that in effect starts today, because the kick-in effect won't happen for, what, another 6 months or so?
Well, certainly you could add up a number of economic arguments as to why Russia would be the first at the table to make a deal, you know. But from the sort of general observation of Putin politics, that he struggles perhaps to isolate this one issue when he's got a whole bouquet of issues, and quite often likes to rope them all together. You know, we talk about Putin going into Syria so that he can have a stronger bargaining chip on the Crimea and eastern Ukraine. You know, there's a rather complicated chessboard. But I think we're sort of, in some senses, getting ahead of ourselves. That the first critical step for Saudi Arabia and for OPEC is to have agreement within OPEC. We had the Nigerian energy minister join us recently here in Abu Dhabi, and he was very strongly advocating the need for OPEC to move away from its current market share strategy and return to its former position of supporting oil price. And he's representing a view from the other side of OPEC, Venezuela, Angola, those countries that don't have $500 billion piggy banks. Now, the Gulf are maintaining the current strategy position, but also clearly starting to feel the stress. As you said earlier, this was meant to be a 2015 problem that would have been washed out during the second half of 2015. And much to everybody's surprise, the U.S. shale production has been very resilient and has maintained its production level without the current low oil price really having a big impact on cutting or knocking out supply there. Now we're going into another year, and forecasts again are that eventually through 2016 U.S. production will be knocked out and prices will start to support and climb in the second half of the year. But really the critical question is, can OPEC come together and have a unified position on taking back its sort of historical perspective of fighting for a stronger oil price, because there's so many countries within OPEC that are under great duress, and the socioeconomic consequence of that duress is very significant. We look at the whole situation in West Africa. Nigeria has a number of its own geopolitical challenges and macroeconomic. It needs a very significant oil dollar, not just for its production price, but also for all of its activities. It's 200 million people economy, very serious needs there, much greater than the Gulf states. So we need to see OPEC come together. And I think there is noises of OPEC coming together, but not sufficient to say that would give credibility to then OPEC having a negotiation externally with the likes of Russia.
Thanks for that, Sean. Anastasia, again, you're nodding. I mean, hinting at change is one thing, delivering change, something completely different. Sean touched on shale there, out of the US and Canada being very robust. But if Russia keeps on producing and Saudi Arabia keeps on stockpiling, where's the break in that negative chain going to come?
I'm not really sure, because there is one more, a very substantial factor that plays a role, and this is the value of financial assets, mostly in Western advanced financial havens that have been growing on the basis of post-2009 recovery and growth, and also as a means of investment, alternative investment, where capital was flowing away from now more uncertain and risky assets. And because a lot of OPEC regimes are essentially autocracies or monarchies, a lot of high net worth individuals are keeping their personal wealth in Western financial assets, in Western financial havens. And they personally have benefited quite a lot from this financial recovery or growth. And there is a disjuncture between their personal incentives and the overall geopolitical or socio-political priorities for their own countries.
Let's call this, just to interrupt you for a second, Anastasia, because I would like to get to my last point. The same question to each of you, very briefly, in a sentence. Mikhail, what we're talking about here is a Russian-Saudi slowdown. Do you think we will get it in a sentence?
Well, I am not very optimistic about any deal between Russia and Saudi Arabia or any other members of OPEC. Russia can strike some sort of an agreement with Venezuela, which is suffering most of the other OPEC members from low oil prices, but not with other members of the organization. And I believe this is a real price war when everybody is against everybody.
Okay.
If you take a look at Iran or Iraq, which are increasing production, you would see that OPEC does not play a role.
Okay. Sean, very quickly, yes or no, will we get a slowdown?
I think if prices are still around $30 in the second half of the year, then I think oil producers will find some sort of arrangement to take some barrels off the market, whether it's a formal agreement or an informal one.
Anastasia?
I don't believe so.
Well, we're out of time as ever. It's time to say thank you to our guests, Anastasia Nesvetalova, who was in London, Sean Evers was in Dubai, and Mikhail Kruishin was in Moscow. And to you, our viewers, thank you for your time over the past half hour or so. You can get more on our programme from our website, aljazeera.com, or our Facebook page, facebook.com/AJ Inside Story. You can also join the debate on Twitter @AJ Inside Story, or you can tweet me. I'll tweet you back. I'm @PeterW1. Thanks for watching. We're back at the usual time tomorrow. See you then.